Hello, everybody. I'm Bob Klefsis, president of All Star Financial. I want to welcome you to our second quarter 2016 webinar, All Star Financial Quarterly Review, Brexit Adds Uncertainties and Slow Growth to the Equation. As you guys know, I have a Bob's Corner that's been a tradition reflecting on the last 30 plus years of money management. I would say that the world has changed, more immediate information. There's really 5 rules of long-term investing, however, that I'd like to keep everybody familiar with, and that's obviously always diversify, always look for value, always take less risk than more, always weigh all the factors, but more importantly, never ever react to greed and fear. And there was plenty of times in the last 6 months that we've had, 9 months and 36 months that we've had a chance to react to greed and fear. Market overview very quickly. Adding to our 5 uncertainties is really Brexit. Prior to Brexit, we had the China oil, central bank intervention, politics, and now we add Brexit, which we'll talk about in a second. Focusing on the U.S. economy and consumers and businesses are really tentative to spend. We see that as a result of that slow growth. We see our GDP finalizing at only about 1.1 in the first quarter, only about 1% over the last 12 months. Pressure on wage and energy inflation is there, but again, most of our growth is being very, very muted by concerns of issues that we have internationally. Unemployment is the great thing that's happening. We've got 5.8 million job openings, not a lot of unemployment there, lowest in 43 years. But we need to start, in addition to saving, in addition to paying off debt, we have to start spending. And we see the business investing declined about 0.4 last quarter, so everybody's holding cash to the tune of 1.9 trillion. Personal consumer savings rates have risen. Personal spendings, however, has not risen at the same rate that we need it to raise. If we look at the bond market, and the bond market, basically, as you know, interest rates go up, bonds go down, interest rates go down, bonds go up. We saw the interest rates drop 33 basis points from the end of the first quarter to less than 1.5%. That obviously was a result of the Brexit fear and problems there. But as a result, we saw positive returns in the emerging markets, global markets, corporate high yields domestically, and our inflation protected securities tips also. So our bond portfolio really consists right now of the emerging market side of the equation as well as the floating, and has performed very well for us. If we look at the domestic side of the world, we look at the treading water and really defying gravity. By defying gravity, I mean that we've got a lot of less growth in the earnings, respectively. Value stocks, however, outperform growth stocks. A little bit of a unusual scenario there because of the last 2 weeks of the quarter being such a huge volatility because of the Brexit vote. But small caps outperformed the large caps. Almost 2 to 1. We saw 2.5% performance on the large caps, only 3.8% on the small caps. Again, a little bit unusual because of the volatility leading into the end of the quarter. Performance, we saw energy that was bad last quarter, a positive 11.4. We saw healthcare that was bad bounce. We saw material stocks bounce, as you can see. But again, most managers are still still holding a lot of cash to their positions. Potential earnings, again, downgrade because of Brexit, question mark there. Growth is likely to outperform, probably because of some of those reasons. On the international side of the world, we look at central banks of Japan and Europe trying to do whatever they can with the Brexit scenario thrown into the equation. European stocks were down as much as 7. Bounced back to negative 2.1. Japanese stocks that held positive for the quarter at a +1. We do have encouraging signs with China. Sales rose there on the retail side, again, servicing their own economy. And we saw the manufacturing activity across the board as a positive too. As an additional, we have basically the tiger nations around China, Thailand, Malaysia, Indonesia, the Philippines, Vietnam, all experienced healthy growth. as we see by the India index gained 3.9% also. Really, in summary, for us, I think the big thing is that we've thrown a fifth uncertainty into the equation. When we thought that China was transforming and have transformed their economy, kind of gone through that tough period. Now, what does the Brexit vote do for them? We felt like oil had stabilized and rallied. What does that do on the price of a barrel of oil? Hasn't really hurt it so far. Interest rates, this is really probably going to be the biggest unknown, where the central banks around the world, are they going to be focused more on lowering interest rates? And again, politics, not only domestically, but in Europe, we're looking at politics and obviously the Brexit vote as creating a significant amount of uncertainty that we didn't have before. At this point in time, I'm going to throw it over to Brian Sensky, our COO, and he's going to talk a little bit about global economies and where do we stand right now.
Thanks, Bob. We're going to dive into page 4 in the newsletter and talk about some of the different global economies that we're looking at potentially investing in or have investments in. Let's first look at the U.S. So in the U.S., on a monetary policy perspective, we're talking about raising rates. That's not stimulating the economy. If you look at the fiscal policy side, when we're talking about budgeting and taxing, again, we're trying to rein in spending, so not stimulating the economy. And then lastly, the political environment, as we all know, a lot of uncertainty there. And as we get closer to November, I don't think it's going to get any better. So in the US, just a lot of uncertainty. That's our buzzword. If we move to Europe, with Brexit happening, which Bob talked a lot about, we think we're going to see quite a bit of monetary policy stimulus in the next several months with potential quantitative easing or going into negative rate territory with interest rates. On the fiscal policy side, like we saw in Greece last year, there's a lot of tightening going on the budgetary side, trying to rein in spending. And then in the political world, with Brexit happening, there's a lot more uncertainty in Europe as well. Now let's look at Japan. Maybe of all the investable economies that are trying to stimulate, might be one of the best ones out there right now. With on the monetary side, they're in a negative rate territory there. On the fiscal side, they're doing a lot of stimulus and infrastructure and other things to try to help create jobs, try to create spending. And then on the political side, they have a lot more stability than what we're seeing in Europe right now, or really in the US. Lastly, let's look at the emerging markets. More stimulus there on the fiscal and monetary side, but then political uncertainty when we look at emerging markets. So nothing looks perfect. In Japan, we have 3 thumbs up, but again, not a perfect economy with how low of growth they have with 0.7% GDP growth. In emerging markets, we're seeing a lot of stimulus, but their 12-month returns do not look attractive and a lot of uncertainty from a valuation perspective. But as you know, we have been dollar cost averaging into the emerging markets because of their valuations. And then lastly, let's just look at gold. It's been a hot topic lately. We've had quite a bit of questions on it from our clients, and it's really something that we need to look at in context of where are all the options we have to invest. But as you guys know, with gold, we don't have earnings, we don't have a dividend, and we don't have a way to stimulate the asset class. So we don't believe that gold has a place right now in a diversified portfolio. It's really a fear-driven investment option. It looks great over the last 12 months, but look at the 5-year returns with gold. Over a long period of time, gold typically just barely keeps up with inflation. So it can be a great speculative play, but it's not a good play in a diversified portfolio. So let's stop talking about some of the serious things. Let's start having a little bit of fun. We've had our interns this quarter give us a couple recommendations. Jake Matheson did the restaurant recommendation for us with the Blue Door Pub. He talks about this Bluesy Lucy that apparently is amazing. I've had a Juicy Lucy, but never a Bluesy Lucy, so I'm going to have to go check that one out. And then with the recipe recommendation, Patrick Wald provided a broiled salmon and mustard glaze recipe that looks really nice. And then he also did a wine pairing with that as well. So a couple things just from All-Star to you guys to look forward to this summer if you're looking for something to try. As always, really want to thank our clients for trusting us and for using our services. And then also mention our referral program. It's a great way for you to get a little bit of help on the fee side, is to recommend some of your friends and family to use All-Star Financial. And then lastly, just give you guys a quick look at our team again. If we can ever help you with anything, we definitely have a team member that can do that, whether it's on the tax side, the wealth planning side, or the investment side. Definitely give us a call whenever you have questions. So thanks a lot for taking the time to look at our webinar this quarter, and we'll do it again next time. Thanks a lot.